Welcome to the Deep Dive from Talk Tickers, where we cut through the noise of earnings calls to bring you the core insights.
That's right. Get straight to what really matters.
Exactly. Today, we're dissecting Iridium Communications Inc., ticker IRDM, their Q2 2025 earnings conference call.
And this one, it was a bit of a mixed bag, wasn't it? On the surface, anyway.
Yeah, a real head-scratcher.
Yeah.
Iridium delivered solid revenue, strong operational numbers.
But the market reaction, oof, pretty harsh verdict. Shares tumbled.
So what gives? That's the question.
It's a classic case, isn't it?
Right.
You know, good underlying performance may be overshadowed by one specific thing, a guidance adjustment.
Okay.
So our mission today is to dig into those numbers,
Right.
Try to uncover management strategic thinking,
Right.
and help you understand if maybe the market's reaction was an overcorrection or, you know, if there's a deeper signal we should be paying attention to.
Looking for those hidden gems the market might be missing.
Precisely.
All right. So let's jump right into the snapshot then. Q2 2025 results. Iridium reported GAAP EPS of $0.20.
Generally accepted accounting principles, earnings per share.
And that actually missed the consensus estimate, which was $0.23.
That's light miss there, yeah.
But here's where it gets interesting. Total revenue came in strong at $216.9 million.
Okay.
That beat consensus by $2.2 million, and it's an 8% year-over-year increase. Pretty robust.
Right. So a beat on the top line.
Yep.
And beyond just revenue, operational EBITDA, that key non-GAAP metric.
Yeah, the one showing core profitability.
Exactly. That was also quite solid at $121.3 million.
Okay.
That's up a good 6% year over year. And the margin was healthy too, around, 55.9%.
Mm-hmm. And even billable subscribers saw a bit of growth, 3% year over year, reaching almost 2.5 million.
So decent subscriber growth too.
So, okay, you're looking at a revenue beat, solid operational profitability. You'd think that's a pretty good report, right?
You would think.
Yet the market's immediate reaction was, well, notably cautious. Shares saw a big drawdown on the day.
Yeah, heavy volume too.
And it seems this reaction stemmed primarily from one thing, that revision to their full-year service revenue growth outlook.
That's the disconnect we need to unpack.
Absolutely. The immediate future for service revenue got a haircut, and investors reacted fast.
So to understand the full picture, we need to dive deeper into the financial performance breakdown. Let's start with those revenue segments.
Okay.
Service revenue, that's the recurring stuff, right?
Yeah.
Their most predictable stream, about 72% of total revenue. That was $155.6 million.
Which is up 2% year over year. Growing, but maybe not the pace people expected.
Exactly. We'll circle back to that. Now, equipment revenue, on the other hand, that saw a dip. Down 15% year over year to $19.5 million.
Okay, so equipment down, but the real standout, the segment that just quietly soared, was engineering and support revenue.
That was impressive.
Up 62% year over year to $41.9 million. I mean, that's a huge jump.
It really is. Suggests strong project work, maybe government related.
Could be. Government service revenue itself was up slightly, just 1% to $26.8 million.
Okay, now let's dive into the commercial side a bit. Commercial IoT, Internet of Things, that revenue looked quite strong, $44.8 million.
Up 8% year over year. Seems like good traction there for their, global connectivity for tracking things.
Definitely. But what caught some attention and ties into that outlook revision was commercial broadband revenue. That was down 6%.
Down 6% to $12.7 million. Okay, so that's a weak spot we need to remember.
Right. And then PNT positioning, navigation, and timing and other data services, that saw just a modest 1% increase to $14.5 million.
Reflecting, I guess, the very early contributions from those PNT solutions.
Yeah, and PNT is a huge potential growth area we absolutely have to talk more about later.
Definitely. Okay, so shifting gears. Let's talk capital. How are they managing money? What's the balance sheet look like?
Well, first off, they announced a Q3 dividend increase up to $0.15 per share.
Okay, nice little bump. About 5.5% over the 2024 level.
Yeah, it signals confidence, right? Confidence in future cash flow, commitment to shareholders, even with that guidance tweak.
And they're putting their money where their mouth is with buybacks too, right?
Absolutely. Continued the share buyback program. In Q2, they retired about 2.6 million shares, spent $65 million doing it.
Wow. And over the last year, that's over 11% of their outstanding shares retired. That's significant.
It really is. And they still have authorization for another $295 million in buybacks through the end of 2027.
So plenty of firepower left there. What about debt?
Net leverage stands at 3.6 times trailing 12 months EBITDA.
Okay, 3.6x. Where are they aiming long term?
They have long-term target to get below 2x by the time they exit 2030. So a clear path towards deleveraging, which investors usually like to see.
Right. And what are they spending on CapEx?
Capital expenditures for Q2 were $20.7 million. Full year guidance is around $90 million.
And that's going into what? Future growth stuff?
Primarily, yeah. Satellite software upgrades, crucial new cloud-based ground infrastructure, especially for their direct-to-device plans.
Ah, the D2D initiative.
Exactly. And even some corporate headquarters expansion. So definitely investing in the future.
Okay. And how does this all translate into cash flow?
Well, the pro forma free cash flow for 2025 is projected at just over $300 million.
That sounds pretty healthy.
It is. It indicates a strong EBITDA conversion rate, like 61%, and a free cash flow yield approaching 10%. So despite the market jitters, the company is spinning off significant cash.
Okay, which brings us back to the elephant in the room, the outlook revision that caused all this fuss.
Right. They adjusted the full year 2025 service revenue growth outlook down to 3 to 5%.
From the prior guidance of 5 to 7%. So a noticeable cut. What drove it? Management mentioned 3 key factors.
Yeah, 3 things. The first, and probably the most impactful on the immediate market reaction, was a faster than expected transition in maritime broadband.
Faster transition. What does that mean exactly?
Basically, customers are shifting. Instead of using Iridium as their main communication solution at sea, they're increasingly using it as a companion service.
A companion to what?
Alongside the big VSAT solutions like Starlink Maritime. You know, those high bandwidth satellite internet systems.
Ah, okay. So Iridium becomes the backup, the safety net, rather than the primary pipe.
Precisely. And that change in usage, they estimate, trims about 1 percentage point off that 2025 service revenue growth.
Okay, 1 point. Did management downplay this?
They were clear. Maritime broadband is less than 10% of their business overall. And it's not a primary growth driver for their big 2030 targets.
Right. That's a crucial distinction. It sounds like a repositioning in that market, maybe not a catastrophe.
Yeah.
What were the other 2 factors?
The second was some voice subscriber reductions, apparently mainly due to canceled USAID funding.
Okay, government funding change. And the third?
A delay in PNT revenue timing. Some of the positioning, navigation, and timing revenue they expected this year. It's been pushed into 2026.
PNT again, so a timing issue there. But here's the really noteworthy part, right? Despite cutting the service revenue growth,
Yes.
the operational EBITDA outlook for the full year remains unchanged. Still $490 to $500 million.
Exactly. That's the key takeaway.
Yeah.
It suggests these revenue headwinds, while real, aren't really hitting their core profitability picture.
Interesting. So costs are managed, or maybe the affected revenue streams weren't the highest margin ones?
Could be a mix. And they also expect cash taxes to stay low, below $10 million through 2026, and net leverage below 4x through 2026 as well.
So the market sees this dip in near-term growth guidance get spooked.
Right.
But management is effectively saying, hold on, our profitability is intact, we're still deleveraging, the core business is stable.
That's the message. It really underscores their confidence in the longer-term strategic growth vectors.
And they've got some really big bets placed there, haven't they? Some really interesting future areas. Let's dig into those long-term positives.
Absolutely. First up, direct-to-device, or as they call it, Iridium NTN Direct.
D2D. Seems like everyone's talking about this.
They are. Iridium says they're making significant progress on testing. On-air live testing is scheduled to begin soon.
And service introduction plan for 2026.
That's the plan. And importantly, it's a standards-based approach, using 5G new radio, evolving towards 6G eventually.
Aiming for global coverage for consumer messaging and IoT, basically connecting your regular smartphone anywhere.
That's the vision, even beyond cellular reach. And that partnership they announced back in May with Cineverse, that seems critical.
Cineverse, they connect mobile operators globally, right?
Exactly. They have this hub connecting like 600 carriers in 170 countries. Partnering with them is key for seamless global roaming for the mobile network operators, the MNOs.
Makes sense. Bridges the gap between the satellite network and the regular cell networks. Sounds like a potential game changer for reach.
It really does. Okay, next big area, PSNT, positioning, navigation, and timing, or Iridium Satellite Time and Location, STL.
This came from the Satelles acquisition they did in April.
Correct. That established Iridium as a serious alternative PNT provider, and management highlighted, quote, a huge opportunity here.
Especially given all the talk about GPS vulnerabilities, right?
Precisely. Think about critical infrastructure. Cell towers, data centers, shipping lanes, air travel, autonomous vehicles.
They all rely heavily on precise timing and location from GPS.
And when GPS signals get jammed or spoofed, which is happening more often, well, these systems are at risk. We hear stories about it in places like the Red Sea, impacting shipping.
So Iridium is offering a resilient alternative.
That's the pitch, a secure global signal from space that's much harder to disrupt. They're aiming for $100 million in PNT revenue by 2030.
Wow, $100 million, and they think they have a big lead.
They believe they are, and I quote again, at least 5 years ahead of any other viable global alternative PNT solution.
That's a bold claim, but it addresses a massive growing need for resilience.
Definitely. Okay, third growth vector, IoT. Still a strong focus. They expect double-digit commercial IoT growth this year in 2025.
Driven by what? Specific contracts?
Yeah, partly a step up in a contract with a large IoT partner, and also the introduction of new devices, these 900, 704 units.
And they're building the ecosystem too.
Seems like it. Added nearly 50 new business relationships, certified 35 new devices just since the start of this year. It's not just connecting people anymore, it's connecting everything.
Right. And then there's the government business, EMSS. That seems like a steady foundation.
Very steady. The fixed price rate for their main contract with the U.S. government is set to rise. Jumps to $110.5 million annually, starting September 15th, 2025.
That provides really predictable, solid revenue, doesn't it?
Absolutely. And that growing engineering and support revenue we saw, some of that is work with the Space Development Agency, the SDA. That strengthens the government relationship further.
And initiatives like Golden Dome, future opportunities there too.
Seems likely, expanding their government footprint.
And looking even further out, they're already thinking about the next generation, beyond the current satellite constellation.
Yeah, they have a next generation network vision for the 2030s, evaluating technologies now, planning to support 5G new radio.
Which will probably be 6G by the time it deploys.
Exactly. To offer a richer experience for cell phones, consumer products beyond cellular reach. Plus, this network will also host Iridium, their air traffic surveillance partner.
And add new space-based VHF services for aviation. Wow. They're definitely thinking long-term.
Decades ahead, yeah.
So, okay, they've got these impressive long-term growth stories cooking, but how do they stack up against the competition right now?
Good question. In D2D, that direct-to-device race is definitely heating up. You've got players like Starlink partnering with T-Mobile, AST SpaceMobile making progress, Apple working with Globalstar.
Yeah, lots of activity. How does Iridium position itself?
They frame their global standards-based D2D service as complementary, not necessarily direct competition, to those more regional cellular solutions, kind of filling the gaps.
Okay, what about PNT competition?
There, Iridium asserts that significant lead. They basically say there are no other truly global alternatives operating at their level right now.
And maritime broadband, where they had the guidance adjustment.
Well, while they're facing that shift to being a companion service, they stress they remain essential for safety, specifically GMDSS.
The Global Maritime Distress and Safety System, mandatory for many vessels.
Exactly. And new GMDSS terminals using Iridium are expected to help stabilize that segment. So they're not disappearing, just evolving their role there.
Okay. Now, zooming out a bit, how has the stock actually performed relative to its peers?
Yeah, it's worth noting, Iridium's total price return has lagged the broader communication services sector ETF XLC in the near term.
Over the last month, 3 months, year?
Yep, all those periods, which helps explain some of that market caution, perhaps.
But what are the analysts saying? The professionals who cover the stock?
Sentiment seems cautiously optimistic, actually. Banks like Barclays, Raymond James, Morgan Stanley, they did cut price targets after the earnings.
Which is normal after a guidance cut.
Right. But they generally maintain their overweight or strong buy ratings. So they still see the long-term value proposition, it seems.
Okay. So looking ahead, what should investors be watching for? What are the key catalysts?
Definitely the Q3 2025 earnings report and any updates to the full year outlook, probably around mid-October.
See if that service revenue trend improves or stabilizes?
Exactly. Also, watch for that EMSS government contract rate step up happening September 15th. That's baked in revenue.
Word else?
Keep an eye on further D2D milestones, those field tests, potential new M&O partnerships, any incremental wins for their STL PNT service, and of course, updates on the share buyback pace and their progress on reducing leverage.
Lots to track. These will be crucial signals about whether Iridium's strategic pivots are working and if the market starts to, re-rate the stock.
Precisely.
All right, investment committee. Let's talk Iridium. The market, as we said, delivered a pretty harsh verdict on this Q2 report.
Mostly due to that service revenue guidance cut tied to the maritime broadband shift and those PNT timing delays.
But this really looks like it could be a classic overreaction, doesn't it? Maybe presenting an intriguing opportunity for folks willing to look beyond the immediate headline noise.
Now remember, everyone, this is our not financial advice segment, purely for discussion. Always do your own thorough research.
Absolutely. Standard disclaimer applies. But if we think about the nuances here, the market might be missing a couple of things.
Okay, let's hear the ideas.
All right, first, contrarian thought. What about considering a long position in IRDM, maybe hedged with a short in some less diversified VSAT pure plays?
Interesting. Explain the thinking there.
Well, that maritime broadband conversion, it isn't necessarily a complete loss, right? It's more like a strategic redefinition.
From primary to companion.
Exactly. Iridium transitions to being an indispensable, trusted companion solution for the Starlinks and other VS services of the world. As global VSAT expands, the need for a truly reliable, always-on, ubiquitous backup.
And especially that GMDSS compliant service.
That need actually increases exponentially.
Huh.
The market prices it as just a revenue reduction, but maybe it's a pivot towards owning a more resilient, essential slice of the whole maritime connectivity pie.
So the play is long IRDM for its foundational role, short pure play VSATs that might face more direct competition without that essential backup utility Iridium offers.
That's the idea, betting on Iridium's indispensable nature.
Okay, that's a fascinating reframe. Shifting from primary to foundational, maybe less glamorous, but potentially more stable, more essential. What's idea number 2?
Idea 2, maybe even bolder. Think about long-dated calls on IRDM, possibly paired with a long position in some PNT-focused defense or critical infrastructure companies.
Okay, focusing heavily on the PNT angle here.
Massively undervalued, potentially. Management flat out stated they are at least 5 years ahead of any viable global alternative PNT solution.
And the need is undeniable.
Absolutely. Rising GPS vulnerabilities, critical infrastructure cell towers, data centers, shipping, air travel. Iridium's STL service is arguably becoming a national security imperative and definitely a commercial necessity.
So the delayed PNT revenue they mentioned, you see that purely as a timing issue, not a demand issue.
Exactly. The demand seems structural and growing. This is essentially a bet on the inevitability of needing diversified, resilient PNT. And Iridium looks like the undisputed leader right now.
So you combine long-dated options on Iridium to capture that potential PNT upside.
With maybe a long position in defense contractors or infrastructure security firms that are actually integrating these kinds of robust alternative PNT solutions.
It raises that important question, doesn't it? If PNT demand is so critical, maybe even non-cyclical with government support like Golden Dome,
Yeah.
is the market really appreciating that long-term step function growth potential? Or is it just fixated on the short-term delay?
Precisely my point. That confluence of government push and commercial pull could lead to growth that the market is just completely underappreciating in its knee-jerk reaction right now. It's almost a bet on the future of critical infrastructure security itself.
With Iridium as a core piece of that puzzle. Very interesting.
Okay, so let's recap quickly. Iridium Communications, Q2, a mixed quarter, strong overall revenue, good EBITDA.
But the market reacted negatively, mainly to that revised full-year service revenue guidance.
And while near-term service revenue growth faces those headwinds, the maritime broadband shift, the PNT timing.
Management seems laser-focused on cultivating long-term growth. Big pushes in direct-to-device, their unique PNT services, and that expanding IoT portfolio.
Plus, they're investing in the future, buying back shares, committed to the dividend.
Right. Now, again, this information is purely for discussion purposes. It should not be considered financial advice.
Please, everyone, conduct your own thorough due diligence before making any investment decisions. So we've laid out the numbers, the strategy, some provocative market takes. But what do you think? What aspects of Iridium's strategic pivot do you believe are most likely to surprise the market positively or maybe negatively in the coming quarters?
We'd love to hear your feedback and insights on today's discussion.